Hello everyone, welcome to the continuation of our Forex Trading for Beginners live session. My name is Leo and I remain your guide. So before we go into the business for today, I want to remind you guys about our BTC Dana Premium Channel Signal. I told you on this channel, we're going to be dropping premium signals and analysis because on this platform, we don't just want you to learn how to trade, okay? We want you to also earn. You'll be earning money while we are teaching you how to trade, okay? But before you can be added into our premium channel, you need to fund your account. That is your BtcDana account with at least $15. Okay, let me show you the deposit. Okay, so you need to fund your account with at least $15. If you fund your account with $15, when you fund your account with $15, um, you get into the premium group, access to premium signals, market report, and more. Okay, so if you can deposit up to $200, you get into the premium group, access to premium signals, market report, and many more. Then you even get a privilege, like a private session, a 1 hour private session with me, where you can show me your chart. Maybe you're an intermediary trader, then you want to show me how good you are or how far you've gone in the forex market. You need any help, I'll be there for you. But that is if you are in the master group with $200 in your BtcDana trading account. Okay, so with that said, let's get into the main business for today. So moving on, yesterday I introduced you to the forex, how forex works, the currency pairs. So today I think it is time for us to move on. Okay, so moving on, I will be introducing you guys to the forex chart. Okay, yeah, you're happy about this because now we are getting into the main cocoa. So now today I'll be introducing you guys to the forex chart, the type of charts we have. Yesterday, I'm sure you had me when I was measuring the bullish and the bearish market. So today we are going to go in depth into what bullish and bearish market is in the forex market. So I'm going to tell you what what we mean by long. When we say we are going long or we are going short, what we mean in the forex market, I'm going to tell you. Then we have pending orders also. So I'm going to introduce you to pending orders. So these pending orders will be very, very, very. Please, I think you should get a note and your pen so that you jot whatever I'm saying here. You jot it down because it is very, very, very important. You see this pending order. In fact, it's going to be very valuable when you get into the BtcDana Premium group. Okay. So then I'm going to share with you what we mean by analysis, the type of analysis that we use in the financial market, okay, and which one is better for you as a newbie, which one you should focus on, okay. I hope we are clear. Now let's go into our first slide, which is what is a chart. Now, charts are the main tools of technical analysis. In technical analysis, we use charts to plot a sequence of price, that is price movement, okay, of an asset over a certain duration. So our chart is where we analyze our market. Okay, it is where we want to it is where we want to sorry. Okay, sorry about that, guys. So our chart is our tool, for technical analyzing. Okay, you want to analyze the market, you need a chart. Okay, that forex chart where you'll be saying, okay, well, this is where the market is going, this is where the market, if the market is going down, the market is coming up. Okay, it's going up. So that is where you see it. That is what we call the chart, the forex chart. That is where you want to see your analysis, where you want to make your analysis, where you want to plot your support, your resistance, your trend line, and everything. Don't worry, we'll get there. I know you don't understand what I mean by support and resistance right now, unless you are already into the forex market before. Okay, so now we have the line chart. Okay, under the chart, we have what we call the line chart. Okay. Okay, so now this is an example of the line chart. You see, we have three type of chart actually. We have the line chart, we have the bar chart, and then we have the Japanese candlestick. Okay. Sorry, excuse me for a moment. Yes. Okay. Sorry about the little break. So, like I was saying, we have three type of chart in the forex market. We have the line chart, we have the bar chart, and then we have the candlestick chart. Okay. So this is an example of how the line chart looks like. You see, it looks like a line. You see. So it goes up, it goes down. You see. So in forex, we don't have a straight line market. It's always going zigzag. It's going down. It's going up. I hope you can see. Okay. So it just depends on the one you are comfortable with actually. Okay. So when I show you the three type of charts we have, it depends on the one you want to start trading with. Okay. So don't worry, after I show you the three charts, I'm going to tell you the one that I'm comfortable with personally. Okay. So this is the second one, which is the bar chart. I hope you can see. So this is how the bar chart looks like in the forex market. You see? You see how they look like? This is the bar chart. So it's plot in the way it looks like a bar. You see? You see? It looks like a bar. So it's also one of our type of charts that we have in the forex market. Okay. So in the bar chart, we have what we call the high and we have the low. Okay. So this is where it opens. It opens if you are going if it's a bullish market, look at this. It opens from here. Don't worry, you might not understand now, but I'll make sure I give you a deep details about this later. So it opens from here while it closes around here. So the same thing as here. This is a bullish market. Okay, so it opens around here and it closes above. Okay, because it's going up. Now, if it is coming down, it opens around here, then it closes below. Take note of that. Okay, a bullish market always opens below, then closes above, while a bearish market opens above, then closes below. Okay, so now moving on, we have the candlestick chart. Now, this is the candlestick chart. This is my own favorite chart pattern. Okay, this is what I love to trade with. So, I said I was going to give you an expo about the one that I love the most. So this is one that I love the most. Okay, so because I'm comfortable with it. You can decide to choose anyone, it doesn't really matter. So you can decide to choose maybe the bar chart or the line chart. But I am comfortable with the candlestick chart. So I'm comfortable because my analysis, I can easily make my analysis on the candlestick chart. I see the candle. I have, we call this candle. These sticks, those that looks like, like stick. I don't know how you want to call it, but I call it stick. Okay, so they are called shadow. You might want to write it down. They are called shadow, or you can also call it a wick. Okay, so you can either call it wick or you call it shadow. Now look at this. This is a bullish market. Okay, the market is going up. Okay, and this is a bearish. Okay, this is a bearish. So anywhere you see a red candlestick, it is a bear. It's a bear candlestick. Then we call the blue one, the green one, the bull candlestick. Okay, this is a candlestick. And remember, I said the sticks here, they are called the shadow, or you can also call it a wick. Okay, so this is another example of our candlestick chart pattern. Remember I told you when we were making examples of the bar chart, I said if we are in a bullish market, the market opens around below. Okay, this is the low. It opens around here and then it closes around here. Now, if we are going low, maybe the market is coming down, the candles will be opening around the top and closing below. Okay, now it's the same thing for our candlestick, our Japanese candlestick pattern. Okay, look at this. This is a bullish market. Remember what I told you about bullish? I say bullish opens below, then closes above. Okay, so this is a bearish market now. Look at this. It opens above and closes below. Okay, so this is our green candle. This is our red candle. Just take note of this. You might want to take a screenshot, or write it down, but just make sure you understand what I'm saying. Okay, take note of it, go back to it later and study yourself. This is very, very, very important, because in the financial market, those are all you'll be needing to look at before you can analyze the market. Or in fact, after you analyze the market, you need to look at this, you need to look at your chart pattern, what is actually going on before you can place any trade. Okay, so it is very, very important. If you have any question or any inquiry, you can drop it in the comment section below. Okay, so I'll be able to answer it for you. Okay, so let's move on. Now, like I was saying earlier, I said we have a bullish and a bearish market. Okay, before we got here, I know some of us must have known what a bullish and a bearish market is right now, because I already made mention of it. In fact, it seems as if I've already made examples of it. If you remember, while I was here in the candlestick chart pattern, and even here, you see, I was saying green is bullish, red is bearish. So this is it. You see, the bullish term, bullish and bearish, are often used to describe how the overall financial market is performing in general. Okay, so what the overall financial market is performing in general, what the market is doing at that particular moment. Is the market going up or is it coming down? Okay, whether there's an appreciation or depreciation in the market. That is what a bullish and bearish market is. I hope you understand how we want to look at the market. Is the market going up or is it coming down? If the market is coming down, what do we say? What do we call it? We call it bearish. Okay. And when it is going up, what do we say is where do we say it's going? What do we say the market is doing? Is going bullish. Okay. So bullish, short for bull. Okay. When you say bull, that is short for bullish. When we say bear, that is short for bearish. Okay, so we can even call a single candle it's a bullish candle, because it's a candle that opens below and closes above. So we say it's a bull candle. Or we say that candle is a bear candle, it's a red candle. Not just because it's a red candle, but it also opens above and closes below. It is a bear candle. Okay, so it is used to describe condition where market is rising. Okay, and a bear where market is where market is going down. Okay, just as I've explained earlier. Okay, so let's move on. So this is another example. In the forex market, bull and bear trends also determine which currency is strong and which is not. So by correctly understanding the market trend, a trader can make proper decision of how to manage risk and get a better understanding of when it is best to enter and exit from your trade. Okay, so like I've said in the beginning, it shows you the market direction. So that is exactly what I've explained here. This is what this definition is talking about. Okay, so it's showing you the direction of the market. The market is going up, you want to place a trade for a bullish market, or the market is coming down, you want to place a trade for bearish market. Okay, so that's just how it is. It is very simple. Okay, all you have to know is the bullish market is up, the bearish market is down. Any market that is going up is bullish, any market that is coming down is bearish. That is it. Okay, that is the layman understanding of the bullish and the bearish market. Okay, now we say we are going long. If you still remember, I made an example of this earlier also, where I said when we say we are going up. In fact, most of those things I've already, even in our beginner courses, I've made mention of, I've made the term using we are going long, we are going short. So if you remember, you must have known what this is exactly. Okay, so whenever you buy a pair, you buy a currency pair, it is called going long, because you are buying. Okay, so it's a forex term. When you hear anybody saying, I want to go long on this market. Hi, GBP USD is going, oh, I want to go long. They mean they want to buy. Okay. So likewise, when you hear them saying, this market is going down, oh, I want to go short, it means they want to sell. I hope we all understand. Okay. So the first currency is purchased, indicating you are bullish, while the second is short, indicating you are bearish. Okay. For example, if you are purchasing a euro IND, this is Indian currency, okay, Indian currency pair. You expect the price of euro, you are expecting the price of euro to go higher and the price of Indian rupee to go below. Yes, you might not understand the concept of this now, but just have it in your mind that going long means we want to buy. Okay, we want to buy the market. Then going short means we want to sell the market. So this is it. When you go short in the forex market, the currency is sold and the second currency is bought. Don't pay attention to all of this now. Okay, just have it at the back of your mind that going short means we are selling. Okay, so let's move along. Now we have what we call the pending order. Okay, we have what we call a pending order. So a pending order in any trade is an order that is not yet executed, okay, or it is not yet a trade. Okay, I don't know if you understand what I'm trying to explain here. It is not yet executed. You've already placed it down. Okay, you've already said, okay, oh, when this price gets to this point, I want to buy or I want to sell, but it is not yet running. So we call it a pending order in the forex market. So generally, while trading, we place the order with a limit. Okay, so this limit is that, don't worry, we have another class this evening. So on that class, I'll be introducing you to the Forex chart, exactly how it looks. Okay, so we'll be in the chat. I'll be showing you example of all those things that I'm introducing you to right now. Okay, so you'll be seeing what I mean by the pending order and the limit order. Okay, so it's our pending trade will get executed if the price of a financial instrument does not reach a certain point. Okay, it will not get executed if our financial institution price does not get to that certain point that we want it to get to before it executes. Okay, so that's what we mean by pending orders. Okay, and under this pending order, we have limit order, we have buy limit, we have buy stop, then we have sell limit and sell stop. Okay, so now this buy stop is a pending order to buy a currency at a low price. Okay, whatever price trader wants to buy than the current one. Now the market is going up, we are in a bullish market. Okay, then let's say you got into your chart. Yes, you know that the market is going to go up. Okay, but there's a particular support below. There's a point. Okay, there's a point in your market you want the market to go down to. Okay, so you want the market to get there, then it starts moving up from that particular point that you want it to get to. Now the process in which you place the order at that particular moment you want the market to get to is what we call buy limit. Now you place your buy limit on that price so that when your price when your market gets to that price, it starts to shoot up. So we call such order a buy limit order. Okay, you know, I told you it's a pending order. It's a market that is not yet executed. Okay, so you want to set your buy limit on that price so that when your price get to that particular point where you've predicted that the market will go up, it will trigger instantly. Okay, so that is what we mean by buy limit. Then we have buy stop. So this buy stop now, let's say the market is already buying. Okay, the market is shooting up, it's going up. We are in the bullish market. The market is going up, it's going up. Then there's a particular point, there's a particular resistance you want the market to break. There's a particular price point you want the market to break above. Now, when this market breaks it above, you already you are setting your buy stop at that point. After that is after the breakout, you are setting your buy stop at that point, so that when the market gets to that point, it continues to go up. While it continues to go up, you are executing a trade. I hope we all understand. That is what we mean by a buy stop. The market is going up. Okay, it's going up like this. It's going up. I'm coming. Let me give you. Okay, so our market is going up. So our market is going up. Okay, it's going up like this. Then you want to place maybe there's a point here where you don't want your market to get that point. You don't want. Okay, so this market is going up. We see is moving up. Then this point here, you want this market to go above this point. Okay, so maybe there's a price around here that you want the market to get to before it continues going up. Okay, before you execute a buy trade. Now you are going to set a buy stop around this area. So when this market that is going up, when it gets to this area, it continues to go up, and then you are executing a trade. Okay, so it triggers your trade because you already set a buy stop here. Then it continues to go up, and then you start to make profit. So I hope we are clear. Now we have the sell stop. So sell limit and sell stop are just the opposite of what we explained in the buy stop and the buy limit. So sell limit now is a pending order to sell a currency pair at a high price, whatever price traders want to sell than the current price. Okay, so you are selling you just the way I make an example in the buy limit. Now a sell limit is exact opposite of it. Okay, you want to place, you are in the market. Maybe when you saw the market is a bit going up. Okay, it's going up, but you know that it's going to sell. Okay, it's going up, but you know the market will definitely sell. Now you want to place a sell limit at a particular high, so that when the market goes to that high, when it gets to that high, the market will start to sell from that particular price point. So that is what we mean by sell limit. Okay, your market is not yet executed though, where you use sell limit. You are going to set the point where you want your market to execute from, where you want it to start selling from. Okay, then we have the sell stop. Sell stop is also the opposite of buy stop. Okay, we are in the selling market. This market is going down, is selling downward. Okay, just as we used this example earlier. Now it is like this. You see, our market is coming this way. It's coming this way. Now we want the market to go below this line. Okay, this is our, maybe we have a support line here. Okay, then we want our market to go below it and then execute a trade for us. The market is already a downtrend, it's coming down already. We know it's going to go down more, but we don't want this resistance, this support. We don't want this support, rather we don't want this support to delay us. Then we want our market to go below this support zone and then execute our trade for us. So the process of setting that market here, that when it gets to this point, it will continue going down, is what we call sell stop. Okay, so that is the example of a sell stop. I hope we all understand. So if you need me to come back and explain this further, you can just message me in the comment section below. I'll see it and I'll explain it again. Okay, I hope we're all good. So let's continue. Now we have analysis. Now we have come to the analytical aspect of forex trading. Okay, so we have analysis in the market, and we have three type of analysis actually. So in this section now, we will learn about the different type of market analysis. Okay, like I said, there are three type of analysis used in the market movement forecasting. Okay, because before you can know where the direction of your market, you have to use an analysis. Okay, so one, we have the fundamental analysis, we have the technical analysis, then we have the sentimental analysis. Okay, so now let's take a look at what we mean by a fundamental analysis. So this is the analysis of social, economic, and political factors that affect currency supply and demand. Okay, so on this analysis, we want to look at the news of what is going on in different countries. Okay, we want to look at what is going on in the US. Okay, are they having is their unemployment rate high, or is their unemployment rate low? So those are fundamentals that are going to, make us know what is going on in their economy, and then we can use that analysis on our own trade, because all of those factors affect forex markets. Okay, so if the economic is good, it is positive in the forex market. If their economy is somehow, maybe they have an issue, one or two, it has a negative effect in the financial market. Okay, so that is what we mean by fundamental analysis. So we have the technical analysis. So this is the study of price and volume movement. Okay, so this technical analysis now, this is the one that we do on our chart. Now let me take you back to where we have the bullish, the candlestick pattern. Look at this. This market is going up. How do I know this market is going up? It's because of my experience with technical analysis. Okay, so we'll get to that point where we have to be drawing lines like this. Okay, so those lines will come like this, they will come this way, they will get to this point, then the market will be touching our line. So that is how we know that the market will keep going up. Anytime the market touches the line, it will keep going up. Okay, so that is what we call the technical analysis. It is the analysis that we do on our chart. Okay, we want to look at the chart where the support or the resistance is, the candlestick pattern, the candlestick formation, what is happening. This candle, this particular candle here, it means something. This candle means something. This candle means something. Okay, so when we understand those things, when we combine those price action, that is how we know the direction of our trend, the direction of our market. Okay, so that is what we call the technical analysis. Then we have the sentimental analysis. Now, this sentimental analysis is, let me say, it's a mind analysis. Okay, it is the way you, as an individual, how you view the market. Okay, okay, you sat down with your market, you already made the fundamental analysis, you check your chart and make your technical analysis. Now the fundamental analysis is the part where your gut is going to tell you, yeah, this is where the market is going. Okay, but you see, this fundamental analysis and the technical analysis, they go hand in hand. Okay, you can't do without fundamental. You can't do, in fact, you can't trade the financial market without going into fundamental analysis. There's no way you want to do it, because if not, the economy or political factor of an economy will always affect you. Okay, even though you have that knowledge of technical analysis, if you don't have the knowledge of fundamental analysis, it's still going to be somehow. Let me just put it that way. Okay, it's still going to be somehow. So you need the fundamental knowledge, then you need the technical knowledge. This sentimental knowledge is also important, okay, because trading deals with psychology. Okay, trading deals with psychology. You want to have a good, you want to have a clear mind consciousness. Let me put it that way. You want to have a clear mind consciousness. Okay, you want to look the market in the direction that the market is going. You don't want to be too sentiment about a particular pair or about a particular currency. Okay, maybe because you don't like Canada so much. I like Canada. Okay, personally, I like Canada. Maybe you don't like Canada so much, then you feel like, no, this Canadian dollar is going to go down. It's a sentiment. Okay, and that is what we call the sentiment analysis. So because it deals with the mind. Okay, but the most important one, they are the fundamental analysis and the technical analysis. Okay, so just have it at the back of your mind that anytime you want to analyze your market, you want to go into the fundamental analysis and then the technical analysis, which is the one you do on the chart. So in the evening time, I'm going to make sure that this fundamental analysis, I'm going to make an example of the fundamental analysis. Okay, I think we still have a little bit of time. Okay, so I can actually give you an example of the fundamental analysis. Okay, so let me give you a brief explanation of the fundamental analysis again. You see this fundamental analysis, I'm sure we all know, or we all heard, we are in Nigeria now, so I'm sure we all heard what is going on in Niger, which is the Republic of Niger. We all heard what is going on there. Okay, so their economy is very down right now. Okay, so assuming you want to trade Nigerian naira against Niger, Niger will be dropping. Okay, Niger will be dropping because of their economy factor, because of the factor that is affecting their economy. So they have a political factor affecting their economy right now. Okay, so that is what fundamental analysis is all about. You want to check the news. There's a particular news for a forex trader. There's a particular place where we go to check our own news, where we see whatever it is going in other countries, where they will summarize everything for us. That okay, this market, don't trade it today. Why? Because this is what is going on in that country. So stay away from such markets. That is the fundamental analysis. I hope we are all clear. Okay, so I've already explained the technical analysis for us. As there is this is the one we do on our chart pattern, on our chart. Okay, so it is the analysis that we do on our chart. Say, let me show you an example of what I'm talking about. Look at this. You see, look at the black line I drew. Look at it. You see this black line I drew? You see this market? This market touched it here. You see, went back up, goes up. You see, touched it around this place again, then keeps going up. Okay, so if you ask me about this market now, I'm going to tell you that this market will keep going up. Why? How do I know it will keep going up? I knew it's going to go up further because it's touching my trend line. Okay, now if this market goes below this trend line, closes above, I told you the market opens and close below, that is for a bearish market, then opens below and close above for bullish market. Now, before this market can come down, it has to be this type of candle, which is the red candles. Okay, now when it is coming down, it has to close below like this. Okay, it has to close below. It has to be a red candle that goes below this black line that you are seeing over here. Okay, it has to be a red bearish candle. Okay, a red bearish candle. It will close below this black line. Now when it closes below this black line, I want to place an order for a sell because I already know the market will keep coming down. I hope you understand. So that is what technical analysis and fundamental analysis is all about. I hope you understand what fundamental. The reason why I'm repeating this is because in our later class, our evening class, I'm going to be introducing you to the chart pattern itself. Okay, how it looks like and how those analyses are done, which is the technical analysis, how they are done on the chart pattern itself. Okay, so what I'm showing you here right now is just an example of what we are going to be doing in the evening class. I hope you all understand. Now, you see this line here. This is also a part of a technical analysis. Okay, if you look at this market very well, you see this market has been ranging. It has been ranging around this area. Yeah, it might be just two candle. Okay, it might be just three candle, but we call this ranging, which is when the candle is jumping above and below a line. Okay, we have this line here, and the price is jumping above and below it. Look at it, it jumped below it because this candle, you see, we have a very long wick here. So having a long wick is also a technical analysis. You want to, I remember I told you, I said you want to see how your candle, every candle in the forex market means something. Okay, it's an information. They are trying to tell you, this is what is happening. No, you remember I told you, um, there's the candles, the way they form is very, very important. We have to take note of what they are saying and what they are doing. So if you look at this candle now, it has a very long wick. We call this rejection. Okay, this long wick now means rejection. This market, this line here, it rejected. You see, the bullish market is supposed to go up, but it rejected. So it created a long wick for us, a long shadow, or whichever one you want to call it. Wick, shadow is the same thing. I like to call it stick. You can even rename it yourself. It doesn't matter. Okay, so that is how it is. Then we have this. You see, this market, it opens below here. Okay, it opens, then closes above here, forming this shadow. Okay, forming this stick for us. Now, this one is telling us this market is going to come down. This one is telling us this market is going to go up. Okay, this is where technical analysis is very important. Okay, this is where technical and fundamental analysis is very important. Now, if our fundamental analysis is telling us that this market is going to go up, so definitely we want to wait for our market, to either break above this current line, this blue line. We want it to break above it and stay break above it. Okay, what I mean by stayed break above it is not jumping between this line again. Okay, so it's above it, something like this. Then it's not going to create something like this again. So that is how we know the market will keep going up. Okay, so like I said, in the evening class, I'm going to introduce you to how the forex chart pattern works, how we make the financial analysis, the technical analysis, and the fundamental part of forex analysis. Okay, so like I said, the sentiment analysis, this one deals with the mind. Okay, it deals with your mind, how you look at the market. So if you want my personal advice, I think fundamental analysis and technical analysis is okay for you. Okay, sentimental analysis is not always good. I'm not saying it's not good, but it is not always good. Okay, when you have the technical analysis, you have a price direction. When you have the fundamental analysis, this one is guiding you for this. Our fundamental analysis is guiding us for our technical analysis. The overall market is the fundamental analysis. We know where the market is going. Okay, the market is positive. The USA is in a good condition. The unemployment rate is very low. Wow, they are very good. Okay, we know their peer is going to go higher. It will keep appreciating. Okay, now that it's appreciating, we want to come to our chart and make technical analysis. Okay, now this technical analysis is going to be in respect to what we saw in the fundamental analysis. Now, this technical analysis, we are going to draw our support and resistance because we already know the market is going up. So we want to have a market that is coming back to touch our support. Okay, we are looking for a market that is coming back to touch our support, then keeps going up. Okay, so don't worry, I'm going to introduce you to a graphical explanation of this in the later section of our live stream. Okay, so Then on the later live stream, I'm going to tell you what we mean by, when I was saying here, I said a market that is coming back down to our support, then shooting up because we are in the uptrend. The U.S. Political factor, their economy is good, they are in good condition. Okay, so that time we call it a retracement. Okay, so in the later section, I'm going to introduce you to all of that. Okay, and please don't forget about our BTC Dana premium channel signal, premium signal channel. So like I said, on that channel, I'll be dropping premium signals for you to make money with. So in fact, you don't have to be a pro right now. You deposit on your BTC Dana app, deposit at least $15 so that you'll be qualified to get into the channel. Now, when I add you into the premium channel, which is the premium group, when I get you into it, you have access to premium signals. Guys, those premium signals, you start making money from with them. I hope you are getting me. You start making money while we are still on our live class where you are learning. I mean, isn't that interesting? Okay, then we have the master. Now, the master is if you can deposit up to $200 or above, I get you into the premium group. Now you have access to premium signals and market reports. You know what is going on. I do everything for you. You don't need to be checking the news. Yeah, you can learn how to check the news yourself. It doesn't matter. But you are a newbie. I can do that for you. All you have to do is deposit up to $15 and get all of that. Then, if you are depositing up to $200 or above, I'll get you have a one-on-one class with me. You can just tell me, okay, Leo, can I have a one-on-one session with you tomorrow around this time? Okay, you have a 1 hour Zoom session with me so that we can interact. We can talk about what is going on. Let me see your chart. Did you make any profit today? What are you lacking? Okay, where do you need me to come in? What is it that you need in the forex market? Where are you lagging? What is it that you really need? Okay, you already know how to trade. You already know the price action. You know the okay, this is how the market works. But this is exactly what I'm not getting. What is it? You see, we can share that one-on-one on our private class. Okay, but you have to deposit your account on BTC. Then you have to deposit with $200. You have to deposit at least $200 or above. If you're depositing $15, you can't have this privilege with me, which is the live session. Okay, please, let's be guided. You can't have this session, but you'll be making money. Okay, I hope you all understand. You'll be making money. Right now, you are still a newbie, or maybe you are an intermediary. You already have the experience, but you are not making money. So this is an opportunity for all of us. You are learning, you are earning at the same time. Okay, this doesn't come always. I hope you understand what I mean. It doesn't come always. Okay, so this is a one-time opportunity. Okay, so that will be all, guys. We'll end our live session here. Then on our evening class, like I said, I'll be introducing you to the forex chart pattern. Okay, the forex chart itself, how it works, how it looks like. Then we'll be discussing further about our analysis and how we make them, which is the fundamental analysis, the technical analysis, and then the sentimental analysis. Okay, so I hope we are all good. Have a nice day. Enjoy the rest of your day. Bye for now.